Hello and welcome to the channel. Welcome to TMP Group. My name is Tom and today is Monday. It's the 24th of January, 2022. Wow, lots going on in the market. Glad to have you in today. Before we get started, I have to tell you that this video is for educational and entertainment purposes only. I'm not a financial planner, not a financial advisor. All of the opinions and thoughts here that are expressed are simply the opinions of myself and the collective opinions of the TMP Group privately. So do your own due diligence, do your own research before you get in any stock or make any trade. And let's just jump right in. So what's going on with the market? We saw futures last night point towards a sea of red. We opened up this morning with even more red, but it was not unexpected. And there are three things that are currently driving the market down right now. The title of this, the thumbnail on this video was not to panic, because these two shall pass. The market will bounce back and we will be in better shape than we were before, as long as we don't panic sell and we hold our positions in the stocks we have high conviction on. But let's take a look at three things that are happening with the market right now and why we believe the market is on such a downtrend and why we believe that we will bounce back from this and become better off. So the first thing is Wednesday we have the FOMC policy meeting that will happen, and the Fed policymakers are likely to use Tuesday and Wednesday, ending Wednesday late, to lay the groundwork for a shift away from their easy money policy. The Federal Open Market Committee, the FOMC, they're likely to reaffirm investors' expectations of an interest rate increase in March. And this will be the first rate hike since December 2018, so it's been a while. Policymakers are not expected to tinker with the policy rates. But the FOMC, however, will set the tone for the coming months of prospective policy shifts. So we need to watch out for that. And the market can thrive on good news, it can thrive on bad news, but it cannot thrive on uncertainty, and that's what we're seeing right now. They will highlight both the pace and the intensity of tightening efforts to quell the rising inflation that we're in right now, pressure, as well as the stocks globally going lower. So Goldman Sachs had come out not too long ago and said they forecast a fourth rate hike in 2022. You can go back about 5 videos I did from this one. I also thought that we would have a rate hike of 4 rate hikes. I believe that the first or second will be over a quarter basis point, so we'll get half a point rate increase. That's just my thoughts. I think that they will just rip the Band-Aid off right away, and we'll start moving forward. We do see a risk for more rate hikes due to the surge in inflation. So that's number one, the FOMC. That meeting takes place on Wednesday. I expect a lot more volatility up into and through Wednesday. And then once the market sees where it's going or what the Fed is doing, I think the market will adjust. It could adjust negative, it could adjust positive, but we're definitely in for some volatility. Another thing that happened over the weekend was the U.S. State Department. They ordered families of U.S. personnel to leave the Ukraine. And as concerns grow about a potential Russian invasion, the U.S. threatened sanctions against Moscow if it invades its neighbor. And also the UAE, the United Arab Emirates, said that it intercepted 2 ballistic missiles that were targeting its capital. And the Houthi rebels were blamed for stirring up that conflict in the region. So we've got the Russia-Ukraine conflict. We've got the Fed meeting coming up Wednesday to discuss policy rates. And then the third thing was this morning economic reports were released that showed that the U.S. economy has slowed down in January as Omicron wave of COVID-19 pandemic exasperated the supply delays and the labor shortage. So those are 3 major things in the market, and that's the bad news. Here's the good news. The good news is that these things are transitory. They will pass. The FOMC will continue to debate and discuss policy, and we will know more about it on Wednesday. So the uncertainty of what's going to happen with rate hikes will continue to happen throughout the year because we won't know, but I think the FOMC will lay the groundwork for the rest of the year. That's number one. Number two, we know that the Russian-Ukraine conflict could continue to go on for quite some time, and who knows how long. However, that will pass, and we will get back to normal over there, and then whatever normal it becomes. And then number three, with the economy slowing due to Omicron, many top analysts and physicians are saying that Omicron should pass late February or early March. Hopefully it does, and we don't have another strand coming on. I know there are other strands out there, but we are learning to live with COVID-19. So what does this mean? Why should we not panic? If we know what's in front of us, we know how to protect ourselves, and we know what to do. So here's what I'm doing. Even though my portfolio is down about 33%, if I take a look over the past month, I'm not selling out of the positions that I have high convictions on. I am not uprooting my money trees. The Super 7 that I'm in, they will stay. And that would include Apple, that would include Amazon, Google, Nvidia, Facebook, Microsoft. I will be trimming positions in some of the higher risk growth stocks. Some of the growth stocks that I refuse to trim in would include DraftKings, would include Lucid, a ChargePoint. I do have high conviction in those growth stocks, and I will continue to buy the dip. And then there are weeds in the garden that we need to pull, and those are the moonshots that we've risked maybe 20% on. We'll get rid of them. How are we protecting our portfolios? If you look at a couple of videos back and you look at the insurance policies that I recommended out there, if your portfolio is heavy in the NASDAQ and we see the NASDAQ continue to drop, then purchasing SQQQ, which is an inverse to the NASDAQ. Inverse means as the NASDAQ rises, the SQQQ falls, or as the NASDAQ falls, the SQQQ rises. So I did recommend, if you're heavy in the NASDAQ, to purchase puts, and that's what I'm doing on the SQQQ, and they have performed nicely. A lot of my stock falls in the Russell, so the SRTY is also another inverse that we can look at. And then, any inverse SDOW if you're heavy in the Dow. The puts that we have in place, let me take a look at them right now. The SRTY 55s, we got almost 100% return on. We will be rolling those. The SARK, which is an inverse to Cathie Wood's ARKK, even though we hold many stocks in common with Cathie Wood, we will continue to have puts on the SARK. March 18th is our put date for the SRTY and the SARK, as well as the SQQQ. We had $37 calls. We sold them at $1,300, and the 44s, we moved them to the 44s. Did very well with our Lucid put, not selling Lucid, but have puts on Lucid. So there are ways to mitigate your risk. Insurance policies we hope we do not have to use, but let's put them in there. So the purpose of this message here is do not fear. The market will recover. Every bear market has been followed up with a bull run. The typical bear market lasts just over 250 days, and the typical bull run lasts a couple of years. So we could be in this for a while. My prediction is we'll be in it on and off, and more on as far as the volatility and downward pressure goes through the first and second quarter. And then I think probably early third quarter, mid third quarter, we start to see that nice run up. So if we sell out right now at a loss, we've lost money. But if we don't sell, we've only gone down in value, but we haven't lost our positions. So I personally choose to hold my positions. I'll never tell you what to do or how to do it, but I will let you know what I'm doing and what I recommend overall for the TMP group. Thanks for your time. I appreciate you jumping in today. Smash the like button if you're still around. Subscribe to the channel, and share it with friends and family. And let's get out there and create some generational wealth. At the end of this, we want to look back as the market returns and be thankful that we were able to stay calm, not panic, and watch our stocks rise to higher levels and hit new all-time highs. And I appreciate you stopping in, and I hope to see you on the next video.